Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist here on May 6th, coming to you from Chicago. Bring you some commentary here in the energy market. So let's get started here. Crude prices are a bit firmer right now. June oil is trading at about $60.86 a barrel, but that's off, even though we're up 46 cents on the day here, we're off our highs. We hit a high earlier today of around $62.58 a barrel. So we've really seen the market here give up most of its gains, even though it's still positive as of right now. Brent's a little bit weaker. That's off about 20 cents. Natural gas is off about a penny. RBOB is off about 3 cents, and the heating oil is kind of quiet. It's only down about 10 ticks, so not too much action there in the heating oil. Talking about some of the things that are kind of affecting the market here today. One, we did have EIA data come out today, and a lot of traders were looking for another build in the stockpiles of about 1.3 million barrels was what traders were expecting, and we actually got a draw this time. That's the first time in quite some time that we've gotten a draw. Draw came in at about 3.2 million barrels here. And what's interesting is that although the market was a lot firmer here today, we've really pulled back, like I said, we're only up about 46 cents on the day. So, we've seen some other positive factors in the market as well. We've got a weaker dollar. The dollar's off here quite a bit. It's really helping a lot of commodities keep a positive tone here in the marketplace. We've got the Yemen conflict there. That is still ongoing at this point. So, you're not hearing too much about it in the mainstream news media, but it's still going on there. So we've got that geopolitical risk still, I think, in the marketplace. Libyan oil exports here are down significantly. They just announced another port closure, so we're seeing a lot less oil flowing out of there. And as I had mentioned here, with that EIA report, not only did we get a draw on the stockpiles, but there was also indication here that that we're starting to see a little bit more demand for RBOB, which is something I commented before in these posts before. So you look at the RBOB market here, demand has actually been very strong there, and so I think you're going to start to see it eventually start to create some demand here in the energy markets. Also suggesting in that report that we're starting to see a little bit of an oil production slowdown that's finally starting to possibly affect the overall supplies, and I think we're seeing that here. Obviously, when prices, here about a month and a half ago, were down in the $40 range, I think you did start to see a little bit of that production starting to get curbed. That's one of the things that I think helped elevate prices up to these current levels. Now, when you take a look at the overall technical picture, of course, we've really seen that market rally here for quite a bit. We've seen the 10-day moving average cross above the 50-day, also cross above the 200-day moving average. Over the last about week here, excluding today's activity, we've really seen that market kind of consolidation mode, and then here today, the market broke out to the upside, but so far we've really seen prices come back down here when you look at the overall daily range. So I know a lot of traders have been focusing on the long side of the market. Here's my take on it here. In the more medium-term picture, I still remain bullish on the market. Short-term, though, I really think that the market possibly is overdone a little bit. And in my opinion, I think prices are poised here for a small pullback. If we get that pullback, I think there could be some opportunity here to possibly look at the long side of that market. So give me a call, shoot me an email. We could talk about some strategies that might be appropriate for you and how you can take advantage of it. And options on futures may involve substantial risk and may not be suitable for all investors.